Shares of public sector banks have been having a dream rally at the bourses. Over the past 6 months, shares of leading PSBs, including Indian Overseas Bank, UCO Bank, Central Bank of India, and Punjab National Bank, have zoomed between 100 and 200%. Others, meanwhile, have rallied in the range of 19 to 98%. By comparison, shares of private lenders have returned between minus 13% and 21%. Public sector banks, in fact, held on to their gains on February 8, despite an overall weak session, after the Reserve Bank of India announced its decision to keep repo rate unchanged. While the Nifty 50 cracked over 1% and the Nifty Private Bank Index 2.8% intraday, the Nifty PSU Bank Index ruled nearly 4.3% higher. Over the past 6 months, the PSB index has surged 53%. So, what has been keeping the stocks on fire?
In financial year 2018, PSU banks accumulated losses of 87,000 crores. After recapitalization and reforms, PSU banks have made a sharp turnaround. This financial year, FY24, the net profit of PSU banks is likely to be around 1.3 lakh crore rupees.
During the December quarter, the combined net profit of 28 commercial banks stood at 73,243 crore rupees. Of this, profit of 15 public sector banks stood at 29,170 crore rupees, with year-on-year rise ranging from 19% to 254%. By comparison, private banks reported year-on-year growth between 4 and 197%. On the business side, private lenders face challenge of high loan-to-deposit ratio, which leaves little room for them to increase lending. That said, analysts believe the rally in PSU bank stocks will be gradual from here on, as their return ratios have peaked.
In the last 2 years, and in near term, we believe that there could be a consolidation as return ratios have peaked out for most of the PSU banks, and there are no re-rating triggers in the near term. However, valuations are still cheap. Some of the banks are trading at par the book value or below the book value versus 1 year forward book value estimate, despite healthy ROE levels.
Despite the consolidation, Malani thinks public sector banks will maintain their edge over their private peers amid robust earnings and credit growth outlook. On February 9, markets will track the last leg of Q3 results and global cues for directional moves.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.